Recording in progress. Okay, awesome. Welcome. Today is July 4th, 2024. It's Independence Day, and we are live. We're going to be going over some chart work here. If you guys have any questions about anything, please drop it in the chat. Today's going to be more of an education day, so I can answer any questions when it comes down to, basics, intermediate, advanced, any strategies, anything. Just let me know what you guys need help with, or if you want me to review anything. Let me know if you guys have any questions, any concerns, or if you guys need to if you guys want to share your charts, we can do it on this call as well. I can have you guys share your screen. But yeah, today is more of an education day. I'll be breaking down some basics here, some chart work. So let me know. I'm going to share my screen here. Drop a 111 chat if you guys can see my screen. Amazing. So right now, market is consolidating, right? Obviously, it's a holiday. The banks are closed, so you're not going to be seeing that much movement in the markets right now. Probably throughout the day, it's going to be consolidating. It's going to be moving slow. There's not going to be that much volatility in the markets. Not much activity going on. So, but I'm going to be going over some chart work here. And yesterday we actually had an event here in Phoenix, Arizona, and I was breaking down some market structure here. Okay, so yesterday we had news, right? We got unemployment claims yesterday, and we had PMI and non-farm employment change. It came out as negative. It pushed the dollar to the downside, and it pushed gold to the upside. As you guys can see here. Today, obviously, we have nothing going on. Tomorrow we have unemployment rate and NFP, non-farm employment change. So this is important news. Red folders. What is non-farm? Non-farm measure the change in the number of employed people during the previous month, excluding the farming industry. Why traders care. It's a job creation. It's an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. Okay, so that we have that going on. Also, unemployment rate, which is the percentage of the total workforce as unemployed and actively seeking employment during the previous month. Okay, so we have that going on tomorrow morning. 30 minutes before our call, we have news. So let's look at yesterday. Yesterday, we had this going on. Let me go ahead and clear my charts here so that I can do the whole breakdown. So let's look at the 4-hour. Okay. Based off the 4-hour, okay, I'm only focusing on this section right here. This, okay. Right here. What's going on here? Are we seeing a downtrend or an uptrend? As a matter of fact, let me go back here before the the breakout. Yeah. What do we have here? Do we have a uptrend, downtrend, consolidation happening? What do we have? Let me know in the chat. We're looking at the 4 hours. 4 hour time frame. The 4 hour time frame is where I look for overall market direction. I'm going to start from the beginning. This is the playbook. Let me know in the chat. For those that don't know what the playbook is an 8-step confirmation checklist that I use to confirm my trades. Okay. So number one, we look at 4 hour market direction. That consists of uptrend, downtrend, or consolidation. So what do we have here? I don't know. It's okay. That's why we have in this call. Now here we had a downtrend happening. Consolidation. Okay. Based off where you want to see where price is currently at. Price is right here. Okay. Overall, we're like on a downtrend because I have at least 2 touches, 2 lower lows, lower highs, lower lows, lower highs, right? So I had at least 2 touches here. This is obviously there's a higher high here, but this is a lower high because this lower high is lower than this previous high. So this was a higher high. Okay, but I'm not focusing on this. Higher high, lower high, lower low, breakout, higher high, lower low, and then lower high. So this is my lower high. Lower high. You can also consider this as a lower high because this lower high is lower than this previous high. So this could be also a lower high. And this can be a higher high. All right. Higher high, lower high, lower low, lower low. This is an equal low. So I have an equal low here. equal low because it's around the same level here, right? It never surpassed this previous low. It stayed around the same area here. So it's an equal low, okay, because it started to consolidate. All right. Now we had a downtrend happening here, and then it started to consolidate here. You guys see that? Now we're on a downtrend, but then it started to consolidate. There's three different market phases. There's three different market phases. Okay. You have uptrend. When you see an uptrend, it's creating higher highs, higher lows. Higher highs, higher lows. Higher highs, higher lows equals uptrend. Lower lows, lower highs equals downtrend. When you see equal lows, equal highs equals to consolidation. Like it is here. You have equal highs, equal lows. It's not creating a trend. It's staying around the same level. Right? Equal highs, equal lows. It's not creating a trend. It's going sideways. Compare to what's happening here. This is creating a trend, a downtrend, because it's creating lower highs, lower lows, lower highs, and then it started to create equal lows, shot up, and then it started to consolidate. Here, it was on a downtrend because it's creating lower highs and then lower lows. Lower lows. This low is lower than this previous low. When you have at least two higher highs, higher lows, you're in an uptrend. When you have two at least lower highs or lows, you're on a downtrend. You're going to get at least two of them, 2 to 3. It's a good trend. Here, at one point, it was on an uptrend. Here, it was on an uptrend. Why? Because it was creating higher highs. It was a lower low here. Higher high. Higher low. Higher high. Higher low. Higher high. Higher low. So you guys see that? It was creating uptrend because creating higher highs, higher lows, higher highs, higher lows. This high is higher than this previous high. This low is higher than this previous low. This low is higher than this previous low. This low is higher than this previous low. That equals uptrend. This is an uptrend. Uptrend. Here, it was a downtrend. All right. Here's a downtrend because creating lower highs, lower lows. And then here is consolidation. Consolidation. Are you guys seeing it? Let me know in the chat. Right? Remember, looking at the 4-hour time frame, you're looking at where you don't see where price is currently at, and look for the phase. Okay, whether it's an uptrend, downtrend, or consolidation, according where price is currently at. Okay, now that you know that price is here, it's consolidating. It was on a downtrend here because you have your lower highs and lower lows. And at one point it was an uptrend, and then it stopped, it failed to create a higher high. It failed to create a higher high. Instead, it went down, created a lower high, and then lower low. Okay. So that's a change of direction. So you have an uptrend, and then it turned to a downtrend, and then it started to consolidate. So here we're in consolidation because price is currently here. So whenever there's a consolidation, is it ideal to trade? Yes or no? Would you want to trade during a consolidation? Yes or no? Is it ideal to trade? Is it a good idea to trade during consolidation? Yes or no? No, right? Because there's no trend happening. It's going sideways. It's not creating a trend. So you want to wait for a breakout to happen for the next break of structure. Okay. So now my second step is going to be my 1-hour support and resistance zone. Okay. I'm going to go to the 1-hour. I'm going to mark up my support and resistance. Now I have a resistance up here, right around 23.35, which is a key level. So I'm going to take my horizontal line. Every $5 is a key level with gold. Every $5. Okay, and I'm going to round it to the nearest whole number. There, 2335.00. All right, so 2335 is my resistance because it was touching here. It was creating resistance here. Okay, around this area. And my support is down here, 2320. 2320 is my support. All right. It was resisting here, and then it broke above, created support. Resistance became support. Broke structure, resisted, came down, broke above, support, boom, and resisted here. So I have my resistance here, my support here. I'm going to take my rectangle. I'm going to draw a zone. The width of my zone is 20 pips, so $2. So $1 above and $1 below my key level. Boom. So my key level is 2335 because with gold, especially with gold, it respects these key levels. All right. These whole numbers, 2335. Now the width of my rectangle is 20 pips, which is $2. $1 equals to 10 pips with gold. $1 equals to 10 pips. So from 2334 to 2336, that's $2 equals to 10 pips. I'm sorry, 20 pips. $2 equals to 20 pips. The width of my rectangle is 20 pips, which is $2. 2334 to 2336 is a total of 20 pips. And then I have my horizontal line, which is my key level at 2335. So $1 above, $1 below. Does that make sense? So that's how I draw my zones. Same thing in my support. Draw it out, go to settings, $1 above, 2321, $1 below my kilo, which is 2319. Boom. There we go. Right. Now I'm waiting for the next break of structure. Okay. Now that I have my 1 hour support zones, I'm gonna go, the second step is I go to my 15-minute. Third step is 15-minute support and resistance zones. That's my third step. Now that I have my 1 hour support and resistance, I go to my 15-minute time frame and I look for my internal support and resistance zones. However, I can use my 1 hour support and resistance for my 15-minute. Okay, I don't have to draw another support and resistance. I don't have to draw that many zones. Okay, 3 is good. 3 zones is good. Okay, now price is currently here right now. Okay, should I draw a resistance or a support? Let me know in chat. Based off where price is currently at, should I draw a support or resistance? I already have my support, my hourly support here. Would it make sense to draw resistance or support? Why support? I already have a support here. I can use my hourly as my support for the 15-minute. Okay, so it only makes sense to draw a resistance because we had a break of structure here. Okay, our recent break of structure happened here around 2330, right here around 2330. We had a break of structure. You always want to look for the nearest break of structure, the most recent break of structure. The most recent break of structure happened here around 2330, which is a key level. Remember, it's every $5 is a key level. Every $5 is a key level. Resistance, right? So here I have my resistance because it was a break of structure. Okay, it was a support and then it broke below. You see how it was supporting here, broke structure, resisted, and then came up and down, broke structure. So it created support here and then broke below. You guys see that? And I'm going to do the same thing. 23.30. It's my key level. And then the width of my rectangle is 20 pips. So $1 above, $1 below. Oh, there you go. Now I have my 15-minute resistance there. So the gray zones are my 1 hour support resistance, and my blue zone is my 15-minute resistance zone. In this case, it's resistance. And I can use my 1 hour as my support for the 15-minute because it all correlates with each other. Okay. You don't have to draw that many zones. You can just stick with a couple. And the reason why I want to draw an internal zone is because I want to see, okay, whether price is going to break above or is going to remain below my zone. If it breaks above, then I could look for the break and retest to the upside and go from zone to zone. Okay. Now, what's my third step? I'm sorry, my fourth step. What's the next step? The next step is now what? Liquidity. I have liquidity, which is my next step. Liquidity, which equals to money. Liquidity equals money. Now, where do we have money? Where do we have money? We have money up here and we have money down here. We have money up here. Whenever you guys see consolidation, it's just building up liquidity. Consolidation equals liquidity. It's just building liquidity. We have money down here because we have sellers coming in, buyers. Okay, it's going sideways. It's pushing price up and down, up and down, up and down. It's building liquidity because price can either break above or below. It can go either way. That is why it's not ideal to trade during consolidation because it can break either above or below. It can go either way. You just never know. That's why you want to wait for the next break of structure. If it breaks to the upside, okay, I'm looking for buys. If it breaks below, okay, I'm looking for sells. Find where the money's sitting exactly. And we also have money sitting here, right? This is all an imbalance, right? This is all an imbalance because price never came back down to fill this gap. So that's also liquidity. We also have money down here because these are all buy orders. Okay. So price could potentially go down there. And we also have money up here. This is an imbalance as well. This is also money. So you guys can use that, you can use liquidity as target areas, as targets where price could potentially go. Okay, price could potentially go up here or down here. Always look for the money. Where's my money? Ask yourself, where's my money? Where's the money? Where's the money? Where's my money? Look for the money. Okay, it's like Grant Cardone. He says, where's my money? Look for the money. Okay, so have that mentality. Where's my money? So fourth step, liquidity. It's where price could potentially go towards. All right. Now, what's the fifth step? The fifth step is break of structure. Break of structure and retest. Break of structure and retest. I'm waiting for the break of structure. I'm not taking any trades right now because I understand it's under a consolidation. We went from a downtrend, right? We were on a downtrend because it was creating lower lows, lower highs, lower lows, lower highs, to now a consolidation phase. It's going sideways. I'm waiting for the next break of structure. And it would be ideal to wait for the break of structure at the hourly zones when it breaks above my hourly zones. Okay. If it breaks above my internal zone, then it could potentially go towards my hourly zone. So that's why I like to have my internal zone to see where price is going, whether it's going to break above or it's going to remain below. It could potentially go to my support. Now let's see what happens here. This was 5:45 on Tuesday. Boom, I broke above my internal zone. Okay, there you go. This was 6:30. So this was New York Open on Tuesday. Okay, I'm gonna wait for the break of structure. Boom, it hit my resistance, my hourly resistance. Did it break above structure? Yes or no? Did it break above? Yes or no? Let me know in the chat. Or did it wick and it liquidated? Let me know in the chat. Did it break above? Yes or no? Did it break and close above my hourly structure? Yes or no? No, right? It only wicked. That's a fake out. That's liquidity right there. It did not close above my hourly structure. Okay, it just wicked. It gave me that wick. And that wick indicates liquidity sweep because it liquidated these sellers. It liquidated these sellers. Sellers came in, pushed price down. They have their stop losses up here. And guess what? Price came up, liquidated, stopped them out, and came back down. That's a liquidity sweep because we have money up here. All right. You want to wait for the break and close above and then the retest. It hasn't done that yet. So I'm going to wait patiently for that. And this is where a lot of traders fail and they end up being stopped out because of this. Because they think, oh, it's a buy. I'm going to push a buy. Boom, boom, boom. And then guess what? Boom, liquidated. Wait for the break of structure. And guess what happened? Boom. Look at that, guys. At 7, I'm pretty sure we had news as well on Tuesday. Tuesday, like, yep, right there. Job openings. Remember this, guys? Job openings. We had job openings on Tuesday. 7 o'clock hit, news. That was the bearish candle right there. That was news. You see, you see why you guys want to wait after news, after the break of structure? This is where most people get faked out, liquidated, get stopped out. You see, it was buy, push price up, and then guess what? News came, psych, boom. It pushed price to the downside and liquidated all these buyers because they thought that it was going to continue to the upside, but guess what? It didn't. It reversed on them. That's why it's important to wait for the break of structure. It didn't do that. All right, so that was news right there. And then started to consolidate again. It's still within my zones there. You see that? It's still within my hourly zones. I'm still going to keep my internal zone there. Consolidating, moving slow. This is London session. And then finally, price broke above. This is London session. Finally, price broke above structure. It closed, broke above and closed structure. It closed above my structure. Okay. Now I'm waiting for the what? What am I waiting for? The retest, right? I'm waiting for the retest. We actually had a retest there. Looking at the 5-minute. I like to look at the 5-minute for break and retest, and there you go. It broke above. Looking at the 5-minute, it broke above and retest. Broke, close, came back down, retest. You guys see that wick? You guys see this right now? I'm not making this up. Look at this. It touched my zone and boom, shot up. It goes quick. You guys want to catch it quick, right? It broke above, closed, came down, retest, and shot up. You guys want to pay attention to these wicks. This is a break and retest. All right. But this is London session. Okay. Now that I have a break and close above my structure, now I'm in buy mode. Now it's creating higher highs, higher lows, higher highs, higher lows. Now I'm in buy mode. Okay, now it's a trend happening. Now we have a trend. Now we have a trend. Okay. This is the time to look for buys. All right. Now what's the next step? Confirmation candle, right? Number 6. I'm looking for the confirmation candle. Confirmation candles. Okay, confirmation candles. Also pay attention to the time. This is London session. This was at 1 in the morning, Arizona time, London session. All right, and I'm going to wait. From here, 5:30. We also had news yesterday morning. Okay, so I have my resistance up here. Created a resistance around 2350. Actually, yeah, 2350. Right. This is a key level at 2350. Right there. 2350. I can draw my outie zone there. Actually, I can always move my zones. Okay, you can always move your zones here. You don't have to keep the same zones down here. You can always move them, modify them, because it's a change of structure, right? It broke above my structure. Now I'm on a uptrend. I'm looking for buys. It's trading higher highs, higher lows, higher highs. You can always change up your zones here. So I'm just going to use this one as my hourly zone. This is my hourly resistance here. 2351, 2349. Created resistance here, and then it broke above my structure. It broke above, came back down. And down here, it could have been my support. 2340. This could have been my support here, my hourly support around 2340. Down here, 2341, 2339. Because I want to go where price is currently at. Price is here right now. My internal zone could have been like around 23.45 here in the middle. This could be my hourly my 15-minute support here around 23.45. Six, 4. Okay, this was news at 5:30. New York Open is 6:30 here, right? So we had to break a structure, create a new resistance here. It broke above. This was news yesterday, 5:30. Created this bullish candle, came back down, broke above, and then started consolidate prior to news. I'm sorry, prior to New York Open. My yellow dash line, that's New York Open. Okay. Broke above, came back down to retest. And then started consolidate a little bit. And boom, New York Open hit. That's a confirmation candle. That's a bullish candle. And it went to the upside. So here, prior to news at 5:30, because we had unemployment claims at 5:30. 5:30 was unemployment claims. 6:30 was New York Open. And this is Arizona time, by the way, because I'm in Arizona. So we had news at 5:30, New York Open at 6:30. This is also a confirmation pattern right here. This right here is a confirmation pattern. It's called 3 white soldiers. So yesterday we could have got in here around 5:15 for the buy. But I didn't take this buy because, obviously it was before 6 o'clock and, and I typically don't trade during these times. But this is a confirmation pattern right here. This is just an example. And this is how I backtest. The way I'm teaching you guys is how I backtest. This is how I study. This is how I look at the markets. Now, the next time that I know, whenever there's news happening at 5:30, okay, I could potentially go in for the buy or for the sell whenever I see a confirmation pattern prior to news. Okay, and I can hold a trade and take the buy. Are you guys seeing this? This is a confirmation pattern right here. When you have 3 bullish candles in a row, that's a confirmation for a buy. So I had that happening right here. So this is a break and retest. It broke above my internal zone, came back down to retest, and it was within that area. And then my confirmation candle, 1, 2, 3, we could have entered here for the buy. At my 3rd candle, boom, shot price to the upside. And then news hit, boom, even push price even further up. And then New York Open, boom. Right? There you go. Now what's my next step? Time, right? That's my 7th step. We gotta look at time. Time is also important. We gotta look at time. And then the last one is scanner confirmation, impulse, or ORS. And I mainly like to use impulse because ORS is basically what I'm teaching you guys here. Key levels, break of structure, break and retest, phone numbers. That's basically what ORS is. Okay. Impulse, I like to use impulse because it's giving me price momentum. Where's the trend? Is it a downtrend, uptrend, consolidation, right? So look at here. Time. I already showed you guys here. This happened at the 15-minute mark. This buy here happened at the 15-minute mark. So every hour, every 15 minutes, every 30 minutes, every 45 minutes, every hour, price tends to react. Make sure you guys know that every 15 minutes, every 30 minutes, every 45 minutes, every hour, price moves, price tends to react. So this buy happened at the 15-minute mark, 5:15, right before news. 5:15, it gave me that confirmation pattern, the three white shoulders at 5:15, that third bearish bullish candles. I could have gone for the buy and hold it, and then boom, and then confirm with impulse. Guys, look, when I saw impulse, when this move happened, it was giving me buying signs, buying signals, buying confirmations. So that's extra confidence to tell you, okay, it's good for the buy. I'm gonna go ahead and load up impulse here. Are you guys getting some value? Is this making sense now? Is this making more sense? The way I'm teaching it and breaking it down like this? And this is gonna take time to learn. It's all repetition, over and over again. Repetition, 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 over and over again. Okay, and also this call is being recorded, so I'm gonna upload it on my YouTube. So that way you guys can check out this call again. But look, by looking at impulse, 5:15, go back, 5:15, 5:15. This was yesterday. Right here. Guys, look at this, man. 5:15, right there. Boom, right there. Wait, is it? Let me see. I want to make sure this is the right time zone. Um, why is the time zone not coming up? 5:30. Yeah, look at that. 5:15, the three candles there. Price is above my EMA, my blue EMA. So whenever you guys see the blue EMA, you're looking for buys. So price is above my EMA. And then I have my blue secondary EMA above my red. So that's another buy confirmation. And then guess what? And then it's giving me blue microtrend arrows. That's even more confidence to get in for that buy. And guess what? It was only up from there. Boom. It went up. You guys see that? It happened right there. That's even more confidence to go in for that buy. There you go. TP1 could have been 2350, TP2 2355, TP3 2360. Boom. And boom. 2360. So that's a total of 150 pips. So you can use these T levels for potential entries, stop loss, and take profit. Enter it here. Boom. Stop loss is always 50 pips down here. This is a 1, 2, 3 risk to reward. Entry could have been around 2345. Stop loss 2340 because it's 50 pips, right? Boom. TP1 2350, TP2 2355, TP3 2360. That's a total of 150 pips right there for the buy. Is this making sense right now? Do you guys see this? By just following the 8-step confirmation checklist? It's all aligning. And plus with impulse is giving you buying signs, even more confidence to go in for that buy. And this is how I backtest. This is how I study. The playbook, use the playbook. Step by step, step by step. Use the playbook. I literally show you guys that it works here on this call, live, by following each step. It works. And this is practice after practice after practice, seeing the patterns, seeing the confirmation candles, seeing the movement, right? This is, it makes sense, guys. It makes sense. And you can apply this on any pair. This works. This works. Like, yes, it's gonna, like, the only difference is price. And this, for me, I use this for gold mainly because I focus on gold, right? Because that's my baby and I'm not gonna cheat on her. You know, she's been treating me right. So this works. But you guys can apply this for any pair. You know, Forex, commodities, stocks, break of structure. It's universal for any pair. Right? What's up, T? I see you raise your hand.
Yeah. Hey, good morning, everybody. Can y'all hear me?
Yeah, you're good.
Just a really quick question. The call is dope. I mean, I feel like I should jump out my skin right now, but this was a very good call. But my question is, when you're doing your short and your long, the way you mark it up, are you basing it off of our support and resistance? Is that how you get your short and your long?
What do you mean?
So when you I guess our risk to reward ratio when you're
Uh-huh.
marking your, yeah, so when you're getting that, like for the stop loss, I see you have it down by the one of
Here.
our yeah,
Yeah.
so is that how you always mark it up with our support and resistance?
Yeah. So remember, you guys these are key levels, the 2340, 2345, 2350. So you can use these key levels as either for either support, I'm sorry, for either entry, stop loss, or take profit. Okay. So here in this case, okay, my entry is 20 around 2345. My stop loss will always be 50 pips for my entry, which is 2340. Okay, which is a key level as well. And it's also a support around my support. Okay, my hourly support. And then my take profits is my next key level above that, which is 2350, 2355, and 2360. So you can use these key levels for either or. It can be for stop loss, it can be for take profits, it can be for potential entries. But in this case, since price is currently like it was right here, give me that confirmation candle. The three bullish candles around 2345. Boom, you entered there at that third candle for the buy. And when I entered here, depending where you enter, your stop loss will be 50 pips from your entry. If you enter at 2346, for example, okay, it has to be 50 pips from my entry, which is like what, 41, 2341 would have been your stop loss from your entry. If you were to enter at 2346, it doesn't have to be exactly at 2345, as long as it's within my zone there, okay? As long as it's precise, it doesn't have to be exactly. It's not always going to be 2345.00 your entry. It's going to be like 2345.250 or 2346.01, right? It has to be like, as long as it's precise and it's within my zone or a little bit outside of my zone, like in this case, that third bullish candle, it opened up a little bit outside of my zone there. That's fine. Okay, but it wicked as well within my zone there, and then it pushed up. Okay, you could have entered there, and then your stop loss will always be 50 pips from your entry. So your stop loss could have been around here somewhere. Okay, as long as it's 50 pips from your entry. Does that make sense? As long as it's 50 pips. So these support and resistance zones are more for break of structure, Okay, that's mainly what the purpose of it, for break of structure. Where's my resistance? Where's my support? Okay, I'm looking for the break of structure. Here, it broke above my structure. This used to be a resistance here, right? It was resisting here, and then it broke above my internal zone. Support, 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 and then it gave me my confirmation pattern here, the three white shoulders for the buy, and then boom. And then you also got to make sure you look at the time. It was at the 15-minute mark, and then confirm with impulse, and there you go. Is this making sense? So you can use these key levels for either stop loss, for entry, or for take profit. And if you missed this entry here, you could have entered here, up here, above on my next breakout structure around 2350. If you guys missed this entry here, boom, just enter it here for another buy here, because there's a breakout structure, right? It broke above, close, so retest, was consolidating, and then when it hit New York Open, 630, it shot price up. And it gave me that impulse, that bullish candle, right? You could enter there for a 1 to 2, right? Actually, for 1 to 3, this is also 150 pips. 2365, it touched 2365. Here, that's a key level. So if you miss this entry down here, boom, you could have entered right here for at the next breakout structure. for the buy, around 23.50, and then your stop loss is 50 pips from there, from that entry, which is 23.45, which is your previous zone for the buy, right? But yeah, guys, that's basically a whole breakdown, the 8 steps. Let me know if you guys got some value. Drop some fire emojis, or you guys have any more questions, just let me know. And now, right now, we see price consolidating. And what do you want to wait for? You want to wait for the next break of structure. Wait for the next break of structure. You always want to wait for the next break of structure, either to the upside or to the downside. But obviously, since we're on an uptrend, you want to look for a break to the upside. But it can go either way. So right now, price is consolidating there. Okay. So price right now it's moving slow because it's a holiday. There's barely any participation going on in the markets. So it's not good to trade right now. You shouldn't be trading until tomorrow, because tomorrow we have news at 5:30. So we'll see how price will react. Okay, guys. So yeah, practice, study more than you trade, back test. Rewatch this video again if you need to. Follow me or subscribe on my YouTube. I'll grow with Carlos. And yeah, guys, this is the whole breakdown of the 8 steps. Make sure you guys know these steps here. It works. This is years and years of study, of trials and error and back testing and study. And, I've been able to been able to gather all the information I've learned throughout the years and all the strategies I learned throughout the years, and just compress it and create these 8 steps and create this playbook here. This is a combination of smart money concepts, institutional trading, a little bit of J.A. Wall, Trend Trap, a little bit of Mike Navarrete with smart money, and a little bit of Oris with Evan Cabral, all compressed in these 8 steps. Okay. So I appreciate you guys for watching. I appreciate you guys for being on here. If you guys have any questions, let me know, or DM me on the side. I'll see you guys tomorrow morning.
Thank you so much, Carlos.
You're welcome, Greta. You're welcome. I'll see you guys tomorrow morning. Have a happy holiday. Happy 4th of July. Be safe out there. Okay. And enjoy your time with your family. I'll see you guys tomorrow morning. Let's run it up.